Traders, welcome back to Start Swing Trade and ready to get into this market and dealing with a little bit of a headache, but hey, who cares? Just drink a little water, get to the market. Let's keep going, market. Let's take a look at what we're seeing right now. It seems like we're getting another leg down in of what I would call the correction, right? We talked about it this week. Would we go down for a 5% correction or a 10% correction? Some people thought the correction was already done as we've been pulling back on the SPY, and we can easily just see that on the charts. Let me take away the lines so we don't focus too much on that. But you can see where we are right now, we're down about 4.28. And that's in the overall market, not the Qs. The Qs are already down that 5%, right? You can see here from the topping action, if I just draw my line to where I'm at right now, we're down about 6.38%. So I think that we need to just start looking for potentially maybe getting down towards that 10% correction. And that could be a move slightly below 350s. So for right now, I'm looking for the 350s as an area that I could be watching for. And this is why I didn't want to get so bullish until the price action crosses that 9 EMA. And this is why I focus on the 9 EMA to show me momentum. Some traders are not going to believe in the 9 EMA, and that's fine. To each his own. If you don't like technicals, hey, this show might not be for you. But I'll tell you right now, the 9 EMA seems to work for me. And it's not something I trade off of necessarily. It's more something to determine where the momentum is and has it left the building or is it still there and we can catch some pullbacks. In this case, you guys can see it. The Qs are not showing momentum to the upside. If anything, they're showing the momentum away from the 9 EMA, away from the 50 simple moving average, and look like what they want to head down. And I mean, if we take a look, average true range is actually starting to crumble here, and the RSI starting to come on the downside, right? Of course, this can go to extremes, and I always like to focus on extremes when I'm looking at RSI. So we still got ways to go there. Extreme for me is going to be an RSI down there towards 20 on the Qs. And right now it's at 34. So this means that we could see some more continued leak. And why do I think this is happening? Let's just keep it simple. It's the AI bubble popping here. That's what happened. What happened? It was multiple expansion that drove this rally higher. Stocks like NVIDIA trading at ridiculous evaluations, right? And why were they trading it? Because AI came. And what was AI all about? It was all looking at earnings, future earnings. And then people started thinking that Microsoft could go and then take a battle against a monster in search like Google, right? Well, that's not necessarily what we're seeing in Microsoft, right? What have we been seeing since they actually reported? Well, we've been seeing continued downside action. Even today, I played Microsoft twice to the upside. I won on both trades, but at the same time, guess what, guys? I got rid of it. It just didn't want to hold. I tried to play this to the upside today. And as it started to come up here towards the 423s and then come back down through that 422s, I said, you know what? I'm going to take my money and run. This is just not being able to hold. And until Microsoft can turn things around, and really, I think it's all going to come down to next week's NVIDIA report, right? Until that happens, we could be continued on this downside action. And I think that this is why we need to do what right now. And I've been saying it, that I've been on that brake pedal, not the gas pedal. I don't want to quickly jump to think that the market's just quickly going back to the top. And I also don't want to be shorting like crazy here because it could just be a 10% correction, right? We could just have one more leg down maybe to get through, and then we could see the bounce. And this time I'm saying for very rare occasions, I'm looking at not trading so much versus taking a lot of trades. There's going to be certain environments where I'm going to be feeling like this is the time where we want to hit the gas pedal and maybe take 14 swing trades. But right now, zero swing trades on, not a single one. And just 2 weeks prior, I had 12 positions. And I think that this is where a lot of times I think swing trading does me a benefit because I don't need to be in the market. And I feel like a lot of times traders and day traders especially get to this point where they need to be in the market. Right now, I don't need to be. I can hang out. I can wait for my positions to set up. I can take opportunities like Microsoft, and I will talk about an opportunity that I got stopped out of 2 names today and was able to bounce back, right? That's the important part. Penn, we lost very tiny amount on the small account challenge as it went back through 23.88. I wanted to get out at 23.84, eventually getting out at 23.70, losing about like 14 cents there, which really wasn't anything on the small account. But it's still, I would consider this a loss, but a very tiny one. And then Gilead, we actually got our loss right out the gates. We got a loss there at 78.75. But at least the Microsoft gains just on the day trades today were able to compensate for that Gilead loss. And I think that that's what it's all about, getting myself back to break even on the day. And then I said, you know what? I'm back to break even with this Microsoft. Let me just take that and celebrate the day. Sometimes a win is just not losing on the day. And today is one of those days for me where I'm going to be like, you know what? I'll take what I can get and keep moving forward. All right, let's keep going, team. Let's take a look at what's going on in the markets. You guys out there, let me know what you guys are taking a look at and if any big moves are catching your attention. All right, let's keep going. Let's take a look at what else is going on in the chat. I'm going to be bringing on Nick Brown in just a second to give us a little bit of a recap of what happened in the minutes. But I really quickly wanted to talk about what happened, of course, in the AI conversation, because I think that that's really the big over importance, right? I think that the AI conversation is bigger almost even than the Fed talk right now, but we'll see what happens. Mitch, what do you see in the KRE? I bought puts in the KRE. Let's take a look at the financials. In a second, I'll be joined by Nick Brown. He'll be jumping in a few minutes. Let's take a look here. KRE is definitely pulling back there, and it still looks weak. I think that I'm continuing to watch this, and now we just need to watch to see if the next rating company comes in, right? Of course, there's 3 major ratings. There's the S&P 500, right? The S&P global ratings that could be coming in here and also downgrading the banks. I think that this is where you need to be kind of watching. If you're playing this kind of story, you're thinking that there's some more downside coming into the banks. I'll give you that link here. This is the S&P Global Ratings website, right? This is the ratings company that I think could be coming in and then downgrading the banks even further. So keep your eyes on that. I threw up the link for you guys to check it out. And of course, we'll take a look at some of the stocks that you guys are looking at in the chat. We'll take a look at Nvidia. We'll take a look at Apple. We can take even a look at Tesla. I see you guys talking about multiple names. Let's go to Nick Brown and find out what happened in the Fed minutes and see what he caught from the tape. All right, how we doing, Nick?
Good. How are you doing, Mitch? I heard that you have a headache. I will say I get a lot of them if I'm stressed a lot, and those very hurt. And it's just you cannot concentrate once you have a headache.
Yeah. My thing is, I sometimes leave my circle lights on for way too long. Like even after live trading, sometimes I just forget to turn them off, and then they just give me like the little tension headache. But hey, there's tension in the markets right now, that's for sure. So let's talk a little bit about that tension. What did we get in the minutes? Anything new that maybe we didn't know before?
Nothing really new. Basically, it just reveals that the minutes today revealed that the board's divide. Majority supports the further rate increases. Most FOMC members continue to see, quote, significant upside risks to inflation, end quote, opening the door to further rate hikes. Now, while the decision to hike was unanimous among FOMC's participants, 2 members of the broader panel favored rates remaining unchanged. We've heard within the past few weeks that a lot of the FOMC members that vote and do not vote are kind of mixed. We heard that they should continue to raise rates, and we've also heard that they shouldn't raise rates. But just going further into the FOMC report, looking at beneath the surface through the headlines, a lot of them say that officials will judge next rate decisions on totality of data on economy and inflation. Some officials see home prices increasing, and that's a sign sector's response to rate increases have peaked. Several officials see need to consider risk of over-tightening financial conditions, where there's some that says inflation has moderated since the middle of last year, but remains well above the 2% target. Now, this does go to further show that a lot more rate increases may need to be possible. But remember, We do get Jackson Hole next week with Federal Reserve Chairman Jerome Powell speaking at that event. And that is going to be one to watch because I do expect him to give some light into what will be happening into the further meetings to come. Remember, we've been talking about this, that B of A has now shifted their final hike to November. They think they're going to skip in September. Remember, anything is on the table. Remember, we have Goldman Sachs also penciling in a 25 basis point cut starting in next year in Q2, but could come faster than anticipated. I don't know if you saw today, Mitch, but Atlanta Fed Q3 GDP, and I'm not making this number up, it's now at 5.8%. Yesterday, it was at 5.1%. And before that, it was at 4.9%. And before that, I think it was at 4.1%. And so it is drastically moving higher. Yes, I know we get Q3, I believe, in September. But this thing is running rampant. And if this stays like this, this will be the fastest growth, I think, excluding COVID, since 2003. That tells you something that Atlanta Fed GDP, now, they could be off a point. They could be off a whole percent, would still take it to, I think, 4.8%. But that still is running very rampant to where most people only think GDP for 2023 is only going to come in at 1, 2, or maybe even 3%.
I think this is something definitely to keep an eye out for. And it just goes to show us that I think that one thing that we all are expecting is that the economy has been strong, right? I don't think anybody's judging that the economy hasn't been strong, but we're all always still like weary, like, is recession around the corner? And I think that the truth is that we're noticing that the consumer has more than what I think anybody really expected, right? And so I do think that at the long run, we are going to run into a problem with the consumer, because the truth is everybody always knows, right? Inflation, true inflation, isn't going down, right? Like the actual inflation, that's not going down. It's just the numbers that are going down. And so what is this going to do? Well, this is just going to do to just continue to just do what, right? Just continue taking my bucks, right? As a consumer, slowly but surely, that pile that I have goes smaller and smaller, right? You're seeing more and more what? Credit cards jumping towards the roof, credit cards jumping. Why? Well, a lot of this is what? We're able to go ahead and get around tough times, but for only a certain amount of time. I think that a lot of people were thinking that, yeah, we would have inflation, but by 2024, probably, hopefully, see that start to come down some, right? Start to see the cost in the grocery stores come down some. Start to see the cost in renting come down some.
I was going to say, rents just made a new high in New York, in Manhattan. I think it's $5,500. I think almost a month in New York.
I mean, how do you live there, right? Let's just be honest. The only way to live there probably is either you're making $200,000 a year or you're living with 5 roommates. And let's just be honest, that's going to be pretty tough for a lot of people to do. And so I think that we're going to start realizing that the inflation and the recession is just going to be later down the line. And I think that the way that we kick this down the line is that we gave stimulus, right? We gave the ability for a lot of the people to buy houses in low interest rates environment, which are keeping those mortgage bills down. But there's still a lot of people that are paying that high rent, that are still paying the high houses that are now available, right? I mean, the average house is now over $300 and something thousand.
Yes.
When the average house, 10 years ago was like, you could get a nice house for $200,000, right?
Yeah.
And I think that that's important, definitely, to kind of catch something to keep an eye out, right? Consumers are definitely living on credit cards. Yes. When does that day come when, we start to see the turnaround, where you start to see the consumer break, is something that we need to be looking for.
That's something that B of A Global Research tracks, Bank of America tracks with their weekly credit card spending and their different updates. They put out some stuff over the weekend. I still haven't gotten to go through it yet. But they have shown that people are still using credit cards. People are still buying. But to your point regarding houses, I think houses in my area continue to go up. And what a general house in my area would be, maybe 60, 70, 80 grand, they're going for 120, 130, 140,000. And people are still buying them because they want to move. But just going to New York and living off, I don't know how you could do $5,500 a month just in rent. By the time you get to year end, that's over 120, 140 some thousand a year. You have to be making tons of money, or you're living with different people. But Mitch, I think we could pivot to a NVIDIA. I don't know if you saw this, but
Let's
this
do it.
afternoon,
Let's take a look, man.
NVIDIA got an upgrade over at Rosenblatt for an earnings preview, and they're taking their PT to 800. That's a new street high from 600. And in their note, they say, quote, "We are applying a valuation framework of a 35 times PE on an earnings power of a low $20 for full year 26. We had been using a 40 times PE of our 1035 full year 25 estimate." You know, this is just something that is very incredible that we're continuing to chase the price target. 800, they go from 600 to 800. You know, maybe this is kind of like an S&P 500 Fundstrat's Tomley short-term call, just because I don't expect NVIDIA to get anywhere near 600, 700, or even 800 in the near term, because the bar is set high for when NVIDIA reports earnings next week. And if they do disappoint, I think the stock is going to get hard. But hey, if they do come in with better than expected earnings, revenue, they come in with better than expected guidance, then this stock maybe could skyrocket. But I just think Rosenblatt has been ahead of the game. They are staying ahead of the game. But you never know. The bar is set high. We shall see how NVIDIA does. And even if they report on a bad day, if we get another downgrade regarding some banks, it's not going to help. So Rosenblatt is going from 600 to 800, something to keep an eye on.
Yeah, it's definitely something to keep an eye on. And I keep seeing more analysts try to chase the price action and guess to where things are going. And that's the problem there, is that, let's just be honest, is that they're relying on earnings that haven't been given, right? They're trying to use models to model where the projected earnings are going, right? This is where I've been talking about it. You know it. What's the term? What's the line, guys? Let's all say it together. Show me the money, guys. And I think that that's what everyone needs to be talking about. If you're an investor in AI, you also should be saying that line by now.
I mean, Mitch,
right?
All these companies that do AI, they don't ever give any revenue targets or say AI is going to make up of this much of the business with this price target. They're just continuing to pound AI, saying AI is the new business model. AI.
We're going to monetize it, but we're going to monetize it, but we don't know how to monetize it just yet, right?
Right.
Things like that,
they don't give any price targets. And Dennis Dick and you have been pounding the table on that these companies continue to use AI to drive their price target, but they don't ever show you the money. They don't ever say, hey, they don't ever say, hey, AI is going to make up this part of the business and bring in this much revenue. They just pump their stock and pump their own company with AI. And in the long term, that's just not going to run. That's just not going to be
just think about it this way, right? We saw the negative come from Microsoft, but wouldn't it have been a different tune if they would have said, like, hey, we see our revenues driving 20% higher because we're using AI?
Oh yes, that would have made a big difference.
You know what I mean? That would have drove this stock to the freaking moon. And then we would have been talking about a whole nother situation. We would have been talking about how this bubble probably can't stop right now. And NVIDIA might have been at 600 already. And so I think that at this point, what we need to be doing is, as always, as investors, is what? First is what? Risk preservation, right? Capital preservation. Keeping my money, right? Because if I just made a big amount of money on NVIDIA, let's just say I'm an NVIDIA investor, and I made a big amount of money, and the stock is now up at 450, and I made, a significant gain. Let's say 129%. Let's go and say even 60%. At this point in time, do I really want to just stay in NVIDIA? And if I am going to stay, you don't think I'm taking at least some kind of profits? Oh, hell yeah. Even institutions are probably at the point where they're like, yeah, we'll take some profits and we'll reposition at a lower price, right? That will add those shares probably back, but after we've taken some gains, right? And I think that that's what a lot of people are looking at with these AI stocks. And one thing that
they surely will be watching NVIDIA. They think Vital Knowledge, as Adam Crisafulli points out this afternoon, that since we got FOMC minutes this afternoon, this clears the way for all the attention to Cisco tonight, Walmart tomorrow morning, and then there's a few other little mini events, but then everybody's focus will be on NVIDIA next week when they report earnings, because that's going to be a main driver, not only in the semiconductor space, but in the AI space as well.
Yeah, and one thing that I'd say is look at Upstart. Look how quickly they went after this before the earnings. And they, of course, I'm not comparing the two, but more along just showing you guys that they could come after this before their earnings hit, right? They could make this kind of reaction maybe happen on NVIDIA before the earnings hit. And if they would make NVIDIA go down, like let's say from the highs, let's say we get it down from that high over here around the 470s down to this first gap. That first gap is going to be 16%. The second gap gets you down 24%. I think if you can get NVIDIA down, 16, 15 to 20% down, that might actually lower the bar enough that if NVIDIA just comes in with some kind of positive AI, maybe it doesn't rip to the upside, but it stays up here. That's another reason why I don't think NVIDIA is going right back down to, let's say, 200. If you're thinking that from up here, I think you're also being a little bit too a greedy bear, right? Let's be honest. You're probably being a greedy bear there. So I think that
there's
it's
greedy
in
everywhere.
between.
There's greedy bulls and there's greedy bears.
Yeah. And we know how those go. And I'll tell you one thing: the greedy bulls sometimes do a lot better than the greedy bears, because the bears get their face ripped off, guys. I was thinking about it today. I was like, okay, so do I go with NVDS, right? The inverse bear ETF, and short kind of NVIDIA and look for this to go higher after they did the split. 40 seemed to make sense today. And I said, you know what? This is me being greedy, trying to not only call the move of AI going down, but then wanting to make the money on the move, right? There's two things. There's sticking with the market and there's making money. Sometimes you're going to be right on understanding where the market is going, but doesn't necessarily mean you have to make the money on that turn. I think that this is where traders a lot of the times just get burned, because they do what? They start chasing and chasing and chasing the shorts, right? Right now, they're like, oh, I'm going to go short Meta right now, or I'm going to go short Apple right now. You're late to the party, guys. And if you're late to the party, that's easily how you just get caught in this chop. Like the people that were shorting NVIDIA on Friday and then seeing on Monday that big candle show up and being like, what the hell happened? Well, the truth is you got to be quick when we short. We want to see elevator moves down and stair step moves back up, not these elevator moves back up also. So you got stair step down and elevator move back up. Not what I want to see. You know what that shows me? A strong stock that I'm shorting. So it has momentum. And yes, I can short it and it comes back down. But when it gets any type of buying coming back, it's big reaction to the upside, not something I want to fight. And I can just tell you that because I've seen it plenty of times. This is like a penny stock that you see ripping. And then you'll see someone trying to play the hero and short it. Instead, a lot of the times, what do? They lose all their account. And then the stock goes under after, like 2 weeks later. So just be careful out there, team. This is not the time to play hero. This is the time to focus and try to understand the market, because a lot of people are on both sides, right? Some people are saying, buy the dip, buy the dip. Some people are saying, sell the rip, sell the rip. So find out which ones it is before you go and you position too much. I think this is what
we should have a market special.
Push.
Me and you hosting that. Buy the rip or sell the buy the rally or sell it.
Yeah, the truth is it's neither right now, I would say. And I think that is hard to do, because one thing that I've actually understood by doing more swing trading, we don't need to be in the markets, guys. I know that there's some people that rely their dinner tonight won't be on the plate because they don't trade, and that's different. If that's the way it is, and your 100% income relies on the market, that's a little bit different. Like let's say Dennis Dick, for example, right? Like he can't just say, oh, I'm going to go take 2 weeks off, right? I can say that I'm going to go and take a week off of trading, right? I don't need this income. This is extra to me. And so with that being said, I'm always thinking that, hey, this is supposed to be extra, not supposed to be for me to be losing when I don't know or feel like I have edge. So this is the time where I'm not feeling like I have edge. Yeah, I can see the AI bubble popping a little bit, but is it completely gone? I don't know. I need to see the revenues come back. I need to see some kind of mentions like that. And that's another reason why I'm not saying that the AI trade is just completely burned out, but it's definitely gotten to the point where it's no longer hype. It's
No.
now show me. It's show me, not versus just, just show me hype. Show me the next hype product,
Show me the
right?
money.
Show me the money, guys. And I try to really kind of bring you guys those quotes and things like that. It's not just because it's a famous quote. It's because it's the truth. And a lot of times we want to be seeing does the hype meet the revenues so that the stories match the fundamentals and the technicals. Because story usually leads, then fundamentals come in with the analysts, just shooting to the upside. And then we see the technicals usually have a tendency of following that. Because why? Because they're looking at future earnings and they're like, yeah, this stock is going to trade 60, 200 times the future earnings. Okay, well then, yeah, we're going to drive this up technically and see what we can get it to. We'll see what happens there, guys. I know we spent a lot of time on NVIDIA today, but I think it was important. I think it's really the kind of leading part of the market. But that's going to do it for us. Thank you for joining me today, Nick. I'm going to wrap up the market, but I appreciate you coming on and giving us some insights like always.
Thanks, Mitch. See you tomorrow morning for pre-market prep. I'll be tuning in as always, and then I'll be with you for live trading.
I'll see you there, Nick. Always good to have you, my friend. Have a good day. All right, guys, we'll wrap it up here as it's already 4:03. Went a little extra for you guys, but I know that we were enjoying that talk there. And we're going to continue to watch the financial services, watch the bigger banks. Does JPM continue to come down? Citigroup, very dangerous stock there. Bank of America, very dangerous. Look at like PACW, the smaller regionals. Those are showing me concerns. Banking concerns come back in. Guess what? This market starts to get hit and says, I'll say it like this: Fugazi with your AI. Fugazi with your AI. Because really quickly, if you want to see this market flip, start getting the banking concern to come back in here. And then you'll start to see a lot of people get concerned. Q's coming down to 362. So now we'll start looking to see if we get that continued correction. It doesn't look like we're getting that right now. SMCI coming right back down. NVIDIA looks like it could come right back down to 400. Am I taking that bet? By no means necessary. If I was going to take that bet, it should have been yesterday off the 450s. So I'm going to respect that, and we'll see what happens. Catch me tomorrow morning on Pre-Market Prep. I'll talk all about this. And of course, if you guys have any questions about what we just talked about, or maybe you guys want to expand on this conversation, hey, you guys go ahead and reach out to me at MoneyMitchBZ. That's what I'm here for, guys. I'm always willing to go deeper into stories, to do special reports. Just, hey, hit me up, guys. Hit me up on Twitter. Hit me up in the comments below. I'll always catch them and bring more for you guys right here on Start Swing Trade. Hit the thumbs up. I'll see you bright and early on Pre-Market Prep with, of course, Dennis Dick and Joel Elconin. What's Fugazi? Take a look at it. Find out. We'll find out, guys. Hit the like.